What are the Monte Carlo results for Plan M? So I assume he's asking about the backtesting results. So let's go to that real quick. So there's no more trust me bros ever when you're an outlier. When you're an outlier, everything is all about data. Everything is, all right, this is the data that we have in front of us. What does it mean? So the Plan M backtesting data, where is that at? Here. But Plan M backtesting data, over 7,000 trades, nearly 4,000 winners, 3,000 losers. That gave you a win rate of 56.9%, relative 57% win rate. Now that right there, while it may not sound like much if you're uninitiated in trading, actually is huge. A 57% win rate is huge. And then the average result is 2.25% gain. Okay. Now that may not sound like much, but imagine, let's do some maths. Let's do some maths. Imagine that you are in AMD, right? And you get a buy signal, and it says, you know what, AMD on average would go up 2.25%. So let's measure that out real quick. 2.25% is right here-ish. So basically $5. Okay. So if you went into AMD and you bought calls on AMD, I'm not telling you to do this. I'm giving this as an example. Let's say you bought an 80 delta call here, $32. Okay. And the price went up by $5.80. We're gonna have to get this. Chris loves options. This is my specialty. So we're gonna nerd out real hard real quick. All right. So you purchased the option for $32.85. So you bought the option for $32.85. It has an 80 delta, 80.46. We'll just round it to 80. 80 delta, which means that for every $1 that AMD moves, this option price will move by 80 cents. Okay. So if AMD moves for the average result on this by 2.25%, so we'll round it to 5.8. So if AMD goes up 5.8, okay, your delta means you got 80% of that move times this divided by 100. You got $4.64 of gain on this option, which gives you this divided by this, a percentage gain of 14%. 14% gain. Now, let's reflect on what I just talked about. This is the average result, meaning that over 7,000 trades of data, on average, the average trade result was a positive 2.25%, meaning there will be losers, there will be winners, but the average return was 2.25% on the stock. Now, if you use leverage, deep in the money calls, like we talk about all the time, that actually turns out to be a 14% gain just on AMD. Now that'll change from stock to stock, option to option, but isn't that pretty cool, right? Rather than a 2% gain as the average, you could be looking at gains potentially as much as 14% or more, or less, right? But isn't that pretty cool? I'm very excited about that. Now let's even dive deeper into the backtesting data right here. The average trade winner moved up 3 ATRs. Let me repeat what I just said. The average winning trade moved up 3 ATRs, meaning you could roll that option 3 times. And when you roll an option, you take partial profits, you free up capital to trade other trades with, and you get to keep the trade alive. It is one of the most ninja hacks that I've ever come across. If you have used it, and I know you have, type the word ninja in the chat. You guys always just flood the chat with ninja when we talk about that. The average winner, 3 ATR up move from entry. Now the average loser is still up about half an ATR. Still up about half an ATR. So if you wanted to roll it at half ATR, you could. But the total end of trade, right, between winners and losers, the total up move came to 3 ATRs, but the ending result was 2.2 ATRs. So that is what I'm super, super excited about. Now, there is a little bit extra data that Scott sent me just last week. I haven't really dropped too much effort into analyzing this, but what he did was on these dates, any of the day, and that was an average of 17 days held, by the way, 17 days held. So this is not like a day trading thing. This is not a couple days. This is 17 days. Now, looking at these results right here, what it says is that on any particular day, any day in particular, if you took five randomly chosen that's set up on a Plan M entry day, these would be the results for that, right? So of course, nobody's going to be able to trade 7,000 trades. Not going to happen. But there's a high likelihood that you could pick five randomly, and randomly, this shows you the average win per trade, 1.66%. Now, this also includes ones that have a negative historical return, right? Most stocks in Outlier have a positive buy and sell signal return, but this even includes the negative ones. Average return per trade, 1.66%. Average win rate, 54%. Average winning trade was 6.7%. Average losing trade, 4%. Let's see. So yeah, what I wanted to show with that is that even if you pick five randomly, you still have huge expectancy here. Now, what is expectancy? On any one individual trade, you can't have any expectations, right? It could be a winner, it could be a loser, okay? But over a series of trades, over hundreds, dozens, potentially thousands, if you really traded it out, you could find what's called expectancy, your average win, your average loss, and your win rate. And that's what we're measuring here, okay? So then that should give you confidence when you go into a trade of what the average result would be in cumulative versus individually. Okay, I think that's really important to keep in mind, is that any one trade can be a loser, any one trade can be a winner, right? There's plenty of people who made tons of money on Wall Street bets who immediately lost it because they have no idea what they're doing. But professional fund managers, which is how I teach you to trade here on YouTube, understand that over a series of occurrences, right, given plenty of trades to choose from, we're going to have a very wildly, hellaciously profitable trading plan. So pretty cool, right? Pretty cool, right? So Wes, that was a long answer to your short question. By the way, let me introduce myself for those of you who don't know me. Christopher Ewell, fund manager, two-time top 100 people in finance, mentored by 5 market wizards, etc., etc. Let's go to the next question. Chris in. Good to meet you, Chris. I'm Chris Ewell. Question for the day. Do you only make trades during the 3 p.m. hour, even when a sell signal comes through overnight? Yeah. But that's my plan. Now, Chris, I would recommend you come up with whatever plan works for you, follow that plan to a T, and then never look back. Now, I worked with Larry Hite, one of the original market wizards, the very first billion-dollar hedge fund manager. And we had a discussion on these lines. And basically he said, if you have a plan, you must follow that. You are obligated to follow that plan. If you don't follow the plan, you might as well have just thrown it out the window because you never had a plan to begin with. So Chris, I'm not saying one way is better than the other. There's definitely more liquidity at the end of the day. It also shows you where price is going to end by the end of the day versus just, 11:37 a.m., 2:21 p.m., whatever. For me, that helps me narrow my focus into only trading during a certain time. And it's also lifestyle design. Then you don't have to sit in front of the screen all day. You know when you're going to act and what to do. So it's a great question. Dinesh, how you doing, Dinesh? What is ATR and how does it work? This is a great question. What is ATR and how does it work? All right, so Dinesh, I got you, my dude. I'm going to pop off here and I'm going to pop off chat for a minute. So down at the bottom on all of my charts, I have a lower indicator called ATR. Now, ATR is the average true range. And this is actually something I worked with Larry Hite on as well. Larry used to calculate this by hand daily to get the ATR value. And the ATR measures volatility. Now, that is actually a really good example right here. You can see AMD's volatility was around 4, meaning the average move over the last 14 candles, default is 14, that's what I've always used. The average move over the last 14 candles is around $4. But then right here, volatility spiked. So now the average move is around $11. $11. So what does that mean to you as a trader? If you are trading a stock and volatility has expanded, your risk has now expanded. If your risk has expanded, you don't want to be trading the same position size, right? Because, for example, that the risk on that basically tripled. If your risk has basically tripled because volatility has tripled, and you're still trading the same position size, you could potentially lose 3 times as much as you were planning on. So the way we work around that is we build our position size using the ATR, and that allows us, when ATR expands, to actually trade smaller. But when ATR is really small, you can trade larger. Now, this will change from stock to stock, week to week, day to day, even. And it's really important as a trader that you keep awareness of what your ATRs are at. Because you can see on AMD, for ages around this $4 level, popped up around 7, back to the $4 level, popped up around 11. And I don't know how long it's going to stay at 11. I don't really care. All I know is that right now, this is a much more volatile stock than it was just a few weeks ago. And then what's really cool is that once you start position sizing based on ATR, you can have the same dollar risk on 2 wildly different assets. I like to use Coke as a boring stock and Pepsi as a super volatile stock. When you position size based on ATR, and you see, let's go look at Coke and Pepsi real quick. So Coke is ATR of 1.03. Tesla is an ATR of 20. So Tesla has 20 times more volatility than Coca-Cola. You trade 100 shares of both, you're going to have vastly different results, vastly different risk. One of them will have 20 times the amount of risk for the same shares. You don't want that. What that means is you need to trade 20 times less than you think you would in order to match the volatility. So how is that calculated? To go back to the question, is this taking the average move over, again, I just use the default 14 periods, and just roll with that. Roll with that. Granted, that's my plan, Dinesh, my friend. Come up with your plan. I roll with that. All right. I'm never going to tell you my plan is the best plan. It's impossible. But everything that I do is based on all data. It's all data backed. And that's allowed me to be successful. Let's see. Stevie says, are you closing plan ETF with the sell signals on Qs? You tell me, Stevie. What do you think I'd be doing? You tell me. These are my exit signals. The first one up here says QQQ sell signal. And if we got a QQQ sell signal today, what do you think I'm doing, my friend? You know the answer to this. Okay. Ocean options. Great question. What's the difference in plan A and plan M? You're going to love this. It's actually way, 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 way simpler than you think. So plan M, right here, plan M has these components, and you need to make sure every single one of these is lit up. You cannot take the trade unless every bit of this is lit up. Okay. That's the point of having a plan. And this is using swing signals. Plan A is identical with the exception of active signals. Now, why is it called Plan M versus Plan A? The funny part about this is that Scott, our quant, and I, we worked tirelessly over the summer building up Plan A like crazy. Now, funny story about this is that for 4.0, Mark and Mahesh approached me and they're like, hey, so Mark's our chief strategist, Mahesh is our CEO, I'm chief marketing officer, and obviously I do all the trading here live. They were like, hey, we got these great new signals in 4.0, we want you to test them out. And so I'm looking at the signals, and I'm going back and forth, and I'm like, dudes, I made so much money in May. In May, within the span of 5 calendar days, I made enough money to pay off my wife's student loans and buy myself a fancy Batman watch, okay? And it was amazing. My account went up 30-something% in 5 calendar days. And then when I was looking at their new signals, I was like, these signals aren't even there. They don't even show up. So I was very disappointed because I'm like, I can't trade these. If I can't show where I would have made this money on 4.0, then how can I ever show these? And so there, I was like, I need more frequent signals. That's basically what the conversation got to. I, as a trader, need more frequent signals. So what they did was they took their swing signals and they reverse engineered active signals to fit within the swing signals. So swing signals are bigger signals, if you want to think about it that way, longer signals, and the active signals fit inside of the swing signals. So you'll never have a buy active signal when you have a sell swing signal. So it's kind of like a double confirmation. So Scott and I, we took these signals and we worked tirelessly on finding a plan that maximized them to the greatest potential. And that was where plan A came from. Plan A for active signals, right? That honestly was this is where we're going to start plan A. And this is what we built. And then we got the data for the swing signals. And I was thinking, oh, it's not going to be that big a deal. It's going to be, it's going to be good. But because these are so infrequent, we probably won't see that much of a difference. And so real quick, let's go to, where's my back test for plan A real quick. Plan A back test showed an average trade of 1.22%. Okay. And we worked really hard on this. This was around 0.3 when we started. And because of all the data that we worked on, got it to basically be 400% higher than we started with. Huge gains were made because of this. So then we get the swing signal data, and Scott immediately comes back and he's like, Chris, I didn't do a damn thing, and we're over 1.3% on the signals without touching them. And I'm like, whoa, wait, what? Just the raw buy and sell signals on its own on the swing signals were greater than as much massaging as we could have done to maximize plan A. So Scott's like, we need to call this plan M. Plan M for money, baby. And I was like, I agree with you, my friend. I agree with you. And interestingly enough, plan M and plan A have basically the exact same signals for entering. I mean, the only change is going from active signal to swing signal. And as I showed earlier, the back test for plan M shows 2.25% average return per trade, which is literally double what plan A is. Now, to switch between these two, it's really easy. You just come up here. You can switch from swing signal to active signal. Now, when you do that, it changes everything in the entire platform. You can't do it in one stock. It'll go in your market breadth. It'll go in your screener. It'll go everywhere. For me personally, it's funny because both of them are amazing, but one is more amazinger than the other. And so I'm going to focus on plan M. But if there aren't any plan M setups, that's where I go to plan A. I like that. That's the difference between plan M and plan A. Does that help? Does that make sense? If that made sense, do me a favor, put a 1 in the chat. If there were some issues, didn't quite follow along, put a 2 in the chat. I would hire a Wall Street plumber for plumbing problems. The stock market is one of the most wonderful things in the entire world. If you treat it like a video game, which is how I like to look at it, right? Of course, the first couple of times you played Mario, you probably sucked at Mario real bad. But after a while, you figured out you got to jump on the turtles, you got to jump on the mushrooms, you got to hit those blocks to get the coins to come out, you got to hit those blocks to get the stars to come out, and then you're like invincible for 30 seconds or whatever, right? And then you get better and better and better over time. And the more you play the game, the better you got. And then eventually you would beat Bowser, and it would just be total world domination inside of your little Mario world. And then Mario 2 came out, and you're like, oh, here we go. Let's do this again. And you would do the same thing over and over, right? Apply that to any video game. When you apply the same logic to the stock market, you are going to suck. But what's great about that is if you're smart, you suck with a small balance, okay? If you suck with the small balance, it's not going to hurt that much. Yeah, it's not fun to lose, but if you lose a couple $100, no big deal. But if you start with the big balance, and this is where a lot of people who... There's an old adage that says, if you want to become a millionaire in the stock market, start as a billionaire. Because for them, they're going to take bigger position sizes and they're not going to care about risk. You with the smaller account balance are going to care about risk a hell of a lot more. And because of that, where you might lose $200, they might lose $200,000, right? So over time, you build up those skills and you can transfer that knowledge into the market and make generational wealth. You can compound generational wealth. And the funny story about that is, like, I have a friend who just recently was talking about how his financial advisor told him to get used to 6% returns in the market. And it's like 6% returns? That's a joke. 6% returns, it would be embarrassing. I prefer 6% returns per month, not per year. Good gravy. And financial advisors, they want to scare you into thinking you can't manage your money. But with Outlier, with the data, with having a trading plan, literally 82 cents a day, you can create generational wealth in the process. Does that mean you're going to win every trade? Of course not. And I'll never tell you will. But given enough trades, winning and losing, you can come out on top and have a high expectancy. So going back to the original question of how much pocket money do I have? Not much. You know what my mom would do? And my mom and dad watch live, so I appreciate them showing me support. They, my mom would send me $20 in the mail when I would go to college, maybe once a week, maybe once every other week. And that was it. That was Chris's spending money. All right. So you don't need much to get started, but you do have to get started to get much. How's that sound? I don't know. I felt like that was going to be more impactful. Can you go over rolling options? Do you roll out and up or just roll out? Brilliant question. Okay. So rolling an option is a offensive move, right? Some trading educators will tell you about rolling options when things aren't going your way. Absolutely not. First off, if you are in a trade and it's working, like imagine you bought, I got Tesla on my screen right here. This is just a hypothetical. Imagine that you bought Tesla right here. Okay. And let's do opening right here. And then it goes up one ATR. The ATR at this point in time was $12, right? So 355. So let's say 377 would be our rolling point. 377. Okay. So when price closes over that point, think of that as a trigger. Okay, I've got my trigger. I've got my reason to do the roll. You can roll anytime, honestly, but you don't have to. This is a trigger event. This is the catalyst to encourage you to do the roll. So let's go into here. Let's go to Tesla and imagine that you own the November 28th. We'll just use the 380s. Okay. Imagine you own this call option. It's gone up in value, and now it's gone from the 80 delta up to like the 90 delta. Okay. So you can now roll this one out because it's gone up one ATR. And the way that you would roll is twofold. Now let me show you my slides for this. There's two different ways for rolling. Where's my slide? It's got Baby Yoda on it. Here. At each profitable ATR, the stock has moved one ATR in the direction you want, right? Can you roll up and or out for a credit? So let's discuss that. When you buy an option, you pay a debit, right? So you have paid, in this case, $73, which is quite expensive, right? You're out $7,300. Okay. That's your debit. To roll it, you then sell that contract and then buy one closer to the money. Now, the choice of which strike to get is up to you. I always look for liquidity. So let's say I go from the 380 to the 400. This would give me a credit. I'll drop chat off for a moment here. This would give me a credit of $16. So plus 1605. Okay. So what I've done here is I've reduced my risk by 1605. So instead of having a total risk of 7,300, my total risk now is 5695. That's a great start already. And you know what I can do with that 1605 that I just took in as credit? Anything I damn well please. If I want to go make a baller ass Costco run, I could do that. If I want to pay for round trip flights to Orlando on Southwest, I could do that because those partial profits are yours. Nobody could take them away. Or you could even go put in a new trade. Those are your partial profits you get to keep. You can't do this with stock. It is an impossibility to do this with stock. Okay, so let's continue on. Can you roll up and or out? So the only time I'm looking to roll out is when I'm within 1 week. Now, because within 1 week, your gamma risk is heightened. The risk of it going out of the money versus in the money is significantly higher. So then I would be looking to roll from 1 week to the next. But if I'm not within the 1 week window, the last expiration week window, I don't worry about rolling out. I'm just rolling up. Okay. Here. So as one order, you're going to sell to close the original position, then buy to open closer to the money with the same number of contracts. And like I said, this takes partial profits now that you can do anything with. It frees up capital that you can do anything with. And it keeps the trade alive because I still own a long call in Tesla. My original one went from like 80 to 90. Now I've rolled back from 90 to 80. So I basically have the exact same trade I started with, but I got money in my pocket and I have less risk in the market. And it is such a sweet ninja hack. Pretty cool, right? Stumpy, that was a great question. Okay, how is this better than Plan ETF? Plan ETF is the defensive plan. Plan ETF is when plans M and A aren't set up. And rather than just sitting in escrow, just sitting in cash, rather than just, not messing up your portfolio, Plan ETF is there to hopefully give us some gains, right? Now, we've had one trade that went well. We're up about 2%. This trade that we're going to close this afternoon, you know what? It didn't work out, right? It might get us back down to even. We might be down 2%. And at the end of the day, it may not have panned out to be all that much. And that's okay, right? Now, you're probably thinking to yourself, what do you mean that's okay? That's not okay to me, Chris. I expect only infinite gains every day. First off, Fantasyland is in Disney World, okay? If you want to live in the real world, you need to be ready for the real world, okay? This is what our backtest looks like on Plan ETF. Now, there are times when Plan ETF doesn't do anything. That's your flat lines. There are times where Plan ETF actually goes down. There are times where Plan ETF goes up. And backtested, Plan ETF shows 1,140% gains. So this is our defensive plan. And in fact, if you only wanted to run Plan ETF, you could. You, honest to God, could. But for me and my trading style, Plan ETF is our defensive plans when our offensive plans are not in play. That makes sense? Shane the Plumber asked a great question. I have all 5 of those books handy, by the way. There is this one here, How I Made $2 Million in the Stock Market. New and revised, updated by my friend, Steve Burns. There's a picture of Steve on the back. You can see, if you go to my my YouTube channel, you can see me having 100 conversations with Steve. Steve is a dear friend of mine. Then Trading in the Zone. This is the Bible for trading psychology. And if you read this, you will hear exactly what I say in these pages. A lot of that is having no expectation on the outcome of the trade. Every trade is unique. What happened in the last trade has absolutely no bearing on the current trade or any future trades. Every trade, every time you get into the market is a completely different market than you had before, right? So if you lost the last trade, it doesn't mean you're going to lose the next trade, because all we can do is look at the data that we have. It has no bearing, right? When I say it has no bearing, I mean, like, there's nobody on the other side who's like, oh, well, I stole his money last time, I'm gonna steal his money again. It's not, it doesn't work like that. New Trader, Rich Trader, also written by Steve Burns. A lot of people think that I was the new trader of New Trader, Rich Trader. I don't think so, but this is a brilliant, this is like the best read you could ever get. So much information, so much useful information is in this book right here. So How I Made $2 Million in the Stock Market, Trading in the Zone, New Trader, Rich Trader, The Complete Turtle Trader, also a fabulous read. And all of these are available on Audible or audiobooks. Pick that up as well. It's brilliant. The Complete Turtle Trader is exactly what we're doing in Outlier University. It's so cool. Richard Dennis, one of the greatest traders in the 80s, he made $290 million by the time he was 29 years old, if you can believe that. He took, I forget how many, I think it was 12 or 18. Anyway, he took a small group of people and taught them his rules, and basically made them overnight millionaires. Because once you understand the rules of the market and you apply the rules of the market, you can be successful. But I have a slide for Richard Dennis, by the way. Let me scroll down. This is Richard Dennis. I always say you could publish the rules, and that's what he did in this book, was he published the rules. I always say you could publish the rules in a newspaper, but nobody would follow them. The key is consistency and discipline. Now, being on YouTube, I publish my rules twice a day, every day. How many people follow them? I don't know. Doesn't matter to me. I'm the only one who's going to trade this plan anyway. So you do you, boo. I have one more book, and that is, and I'm so flippant about trading because, like, trading doesn't hurt me anymore. right? I have no emotional connection to trading anymore. I tell people that trading should feel effortless. Trading should feel like you're walking into the bank, you're signing on the dot for a CD, a certificate of deposit, and you're just using it as an ATM, and you come back later and you get money out. That's how trading should feel. It should feel that boring. The final book, Trend Following by Michael Covell, also the author of The Complete Turtle Trader. This was the best $10 I ever spent in my life. Hands down, it's not even close. Now, if you can get this version, this is the 2004 version. There is a newer version, and there may even be a newer version since then. Don't buy this one. It's twice as thick. It's way drier. You want to get the 2004 edition if you can find it. So those are my top 5 trading books. If I had to add a 6th to it, oh, that's hard. That's hard. Hang on, I got all these stacked here. That's so hard. What would be my 6th trading book? I think it would probably be The Man Who Solved the Market. Now, granted, this probably changes week after week. The Man Who Solved the Market. So this is the story of Jim Simons and Renaissance Technologies. And I actually met the author of this, Gregory Zuckerman, works for the Wall Street Journal. The story of how Jim Simons used math basically to come up with very precise trading rules that he automated with his computer systems and created a fund that was so profitable. I believe it was like 44 or 60. I can't remember. It's either 40 or 60% annualized gains per year, which if you're not in this world, you're probably thinking 40 to 60% gains per year. That's nothing. I like all Wall Street bet and they talk about tens of thousands of percent. 40, 60% stupid. I wouldn't even get out of bed for that. Shut up. You don't know what you're talking about. Go jump off a bridge. Go find a channel who sucks and wants to tell you $75 in this one stock will make you a millionaire. That's not the reality of trading, okay? 40 to 60% gains year after year is masters of the universe money. In fact, it's more money than God, okay? Some great books out there. But they will be writing the Men Who Solved the Market the second time, and it's going to be the Outliers. I'm very excited about that. Goody the Skater says, how do you feel about using call debit spreads and put debit spreads for building a small account? Should I just buy regular calls and puts on 7780 Delta? I'm glad you asked. So what I want to do here is I want to jump into what a call debit spread is. So call debit spread. Now, I don't want you to take this personal because I used these for years. And when I was working with Steve Burns, oh, come on, itty bitty baby one like that. I want a good image. Is this one gonna be any better? Oh, wait, maybe it's because I did that one. Maybe if I do this one, open image, new tab. Oh, there we go. Okay. I used these for years. And when I was working with Steve Burns, he said, yeah, I used to trade that way too, Chris, but then I realized I wanted to make money. So I'm gonna tell you that, Goody. I used to trade that way too. And then I realized I wanted to make money. Now, what do I mean by that? What do I mean by that? So on this one right here, right? This particular one, it's a $5 wide spread. You paid $200 for the spread. Your max gain is $300. Okay. Now let's see if we can replicate that in Tesla. Let's see if we can replicate this. So let's say we went with an 80 Delta call and we went $5 away and we sold an 80 Delta put. So this one actually would have a debit of $4.80, meaning your total gain would be 20 cents. But let's see if we did it right here, if that would get closer. Not quite. Hang on, we're almost there. I hit this one. Debit 290. Debit 200. Oh, this is slightly out of the money. Hold tight. Now, hold on. We're almost there. I'll get the right strikes here. There you go. So in this particular example, you'd be buying the 460 call and selling the 465 call. That would give you a debit of $2.10. Now, $2.10 means that your max loss in the trade is $210. Your max gain on the trade is $290, right? They have to total up to $500. They have to total up to your spread width, which in this case is $5. Now, if we were to do this, your total deltas, remember, delta is the rate of change for every $1 in the underlying stock, how much your option grows. Your delta is 2. Your delta is 2. So for every dollar Tesla goes up, you make 2 whole cents. That is not worth it to me. And even if we did it deep in the money, right? If we went for like the 80 delta, same $5 spread, your delta is 1.69. Spreads annihilate your deltas. It's just, it is a mathematical fact. You are buying 80 deltas, and then you are selling off 78 of those deltas, leaving you with a total net delta of 2. So maybe you're thinking, oh, well, I'll go wider, right? I'll go wider. I'll go $10 wide. Your deltas are 3. You have 3 deltas in this case. So I would not do spreads. And like I say earlier, I used to trade like this, and then I realized I wanted to make money because you're hamstringing yourself. You're throwing a good trade against the wall and saying, no, I don't want to maximize profits. I don't want to maximize profits. So in this case, what I would say, Goody, is focus on smaller stocks. Because let's go to SoFi. SoFi is like a $26, $30 stock, something like that. SoFi Bros Unite. Like this deep in the money call is going to cost you, well, the spreads are really wide on here. Let's say it's going to cost you $4. The same $4 that you would have spent buying that debit spread. But now you get all those deltas. You get all those juicy deltas. Does that make sense? It's a great question, my friend. Okay, Cheeky Chimp. Is options trading more profitable than swing trading? And following that, is outlier better for options trading? Okay, so let's make some definitions here. Day trading is where you're getting in and out in the same trading period. Generally, you don't want to hold things overnight if you're day trading. Swing trading is where you're taking a position for potentially multiple days at a time. That's what I do. That's what I found works best for me in my my portfolio, my lifestyle. Now, swing trading can include stocks or options. So that's where I'm trying to define definitions here, is because options tradings, you can do swing trading with options, or you can do swing trading with stock. Doesn't matter. It feels like we're kind of like cross-germinating terms here. So is options trading more profitable than swing trading? Options trading, if you know what you're doing, can be tremendously more profitable than stock on its own if you know what you're doing. That's the important part here. Because the leverage cuts both ways. If you are not able to take a loss, you shouldn't be trading at all. If you're not able to take a loss, I would start with stock, because once you can get the handle on taking losses, everybody can take wins, and that's not a thing. And when I say everybody can take wins, it's not a thing. And when I talk about you needing to learn to take a loss, this is what happens to most people. They blow up their accounts specifically like this, right? They buy right here, and it turns around knowing that you should sell the stock when it turns around on you. But you don't, because you're afraid that the moment you sell, it's going to take off. But what actually happens a lot of the time is that rather than selling, it just continues on and gets worse and worse and worse and worse. And that's why I say most people should start with stock. And once you learn how to take losses, then graduate to options for the leverage. Now, the question is, outlier better for options trading? The great thing about these plans and the great thing about outlier is that everything is built to work with stock. Okay, so for example, AGNC, you hit the performance summary. You can see while buy and hold's down 34%, outliers up 32%. Not bad. Now, here's where it gets even better. This is specifically just on buy and hold on the stock itself. Now, you can get access to the entire platform for 82 cents a day. Okay. The capital efficiency is actually really, really cool. Now, if I can do the math correctly, and sometimes I suck at the math on this, you're going to be like, holy moly, that is cool. So these buy and hold signals were generated over 1,471 days in the market. The buy and sell signals were generated on 494 days in the market, meaning you were in the market 34% of the time with an average 11-day holding period. And there were 43 buy signals during this time. 43 buy signals. Yet you were in the market only 34% of the time. So let's see if I can do the math correctly on this. 34% of the time. So 100% of the time, you'd have gotten negative 34%. Let's see. So 100% of the time, let me put this up here. Percent of time. You would have gotten negative 34.55%. However, well, capital efficiency is going to be crazy. I won't be able to calculate it correctly because this is a negative value. But what this means is that for every day that you're in the market, I can already see the errors are coming. That's why I'm stopping even trying. Every day you're in the market, your capital is working 5.7 times more effectively on this stock. So basically, you're getting 5.8 times higher returns per day that you're invested. And remember, you're only in the market 34% of the time. So you get 5 times higher return. And once I saw that was negative, and once I realized that, I was like, oh, hang on, my formulas are not going to work correctly. So to answer the question, is options trading more profitable than swing trading? You can swing trade stock or option, and both of them are going to be great. Is following the outlier better for options trading? Outlier is built on stock, and what's great about stock is that a lot of stocks, not all of them, many stocks have options, so you can then take those buy and sell signals, go into the options market, and then trade that with leverage and get even bigger returns. Pretty cool, right? Bill says, what about doing SQs? So SQs is leveraged short QQQ, meaning right now we're long, and I'm going to get out at the end of the day because I have an exit signal. TQQQ is a triple leveraged QQQ. SQQQ, I believe, is a triple leveraged inverse ETF of QQQ, meaning when QQQ goes down, SQQQ goes up. Outlier is developing short signals. It's not there yet. It's still an R&D. And I would bet you very much so, Phil, that we will be there. We will be there. Roar asks, is there a plan in place for when plan M sets up, choosing the best stocks, prioritizing the best sector expectancy versus historical returns, or any calculation along those lines? Okay, so I think the answer to this question is in the slide deck, which, like I say, you can get the slide deck from our Discord. Every single slide is there. I think what you're talking about is sector relative greed. When the sector greed score is greater than the market greed score. Now, that has not been the case for a minute. Let me go into the screener real quick, and we'll take a look at this. We are building this into Outlier. We were supposed to have a huge upgrade, adding 6,000 new stocks by the end of October. But when we loaded in everything, it broke our servers. We maxed out our servers. So we're working on server upgrades in order to get those 6,000 more stocks into Outlier. So it is coming soon. I can promise you that. And one of the things that's coming as well is having a breadth, like consolidated breadth summary, I believe it's called. I did preview it once for everybody. And it'll show you the fear and greed score for every sector and then rank it through the market, which is what this bookmarklet does from VacLab, one of our amazing outliers. And so to your question, to Roar's question, is you want to be in the sector that has greater greed than the market. Now, this is one of the reasons that we haven't been in Plan M. It's because the market has been on fire, yet no particular sector has been greater than the market. Right? All of these are 40s and 50s, whereas the SPY, fear, and greed is at 70. What we're looking for is SPY, fear, and greed to be under 70 and rising, and then finding a sector that has greater greed that's also rising at the same time. So I think that answers your question. It's a great question. Wild Bill, on a day with a sell signal, which you still sell at the end of the day per your lifestyle trading plan? Absolutely. I'm not even going to look at the market during the day, and I'm going to follow my plan, which is the trade at the end of the day. Now, Grant, does that mean it's the best plan? No. Come up with a plan with the lifestyle that works best for you. Justin says, I'm looking to start my own backtesting. When you backtest, where do you pull your data from? Oh, gee. I don't use Python. I've never Pythoned in my life. What I did before we had Scott and our team that could do the backtesting was I would do it manually. I mean, manually. I would look at the outlier buy and sell signals. I would go into trading view and I would mark, here's the buy signal, here's the sell signal. What was the difference? That's the old timey way of doing it. And that's what Chris did for ages. Let's see. Okay, Dave, if delta, open interest, and price and percent extrinsic fit your plan, but the spread is greater than 50 cents, do you still take the trade? No, I don't. Let's talk about why. Let's talk about why. We're going to look at SoFi right here. Now, these spreads are crazy. This can't be, give it a little bit of time. This will probably work itself out. But let's say that you were looking at this one right here with a 320 bid, 630 ask. Okay. To cross the bid and ask, because you have to buy it on the ask and sell it back on the bid, you might get somewhere in between them, but let's just imagine that you have to buy here and sell back here. Okay. That is the difference of 6.3 minus 3.2. Okay. And then you divide by what you paid for it, divided by 6.3, means that's a 50%. You're taking a 50% loss from buying to selling. That is an extreme example. That is an extreme example. I don't know why it's that high. But even right here, from 286 to 207, somebody's probably buying that right now. 2.86 minus 2.07. That's 79 cents. And you divide it by what you paid for it, 2.86, means you're taking a 27% loss. Dave, that should be eye-opening right there, my friend. You're taking a 27% loss to buy it and then sell it. Isn't that crazy? You don't want that. You don't want that in your life, my friend. Not at all. Okay, so great question here. When does Joe start orientations? So I met with Joe and Deep Thought yesterday. We are planning on a live orientation session. That's going to be up to Joe to figure out how that fits in his schedule on probably a weekly to every other week basis. Now, this is going to be so monumental because a lot of people come into Outlier and they're like, I don't know what to do. Where do I start? This is meant for you, right? So I can't tell you exactly when, but it is coming soon. And this will be something that we're very excited to make the transition from not trader to being normal to being an outlier as fast as possible. Let's see. So many good questions today. Does the Outlier platform include the GLD ETF? Actually, not only does it include the GLD ETF, the GLD ETF went in a humongous monster run right after the buy signal came. Let me show you. Let me show you. This is GLD. And the buy signal came on August 26th. Where was that? GLD. August 26th. Right there. That gold's huge run. Outlier told you the buy signal on that date. Right there. As it ran like crazy. Now on that topic, I know a lot of our outliers traded this and rolled it. I think some of them said they rolled it 10 times. We talked about rolling earlier, booking partial profits all the way up and kept that trade alive 10 times. I've never rolled anything more than 3 or 4 times. They rolled it 10 times. Isn't that cool? Isn't that cool? That's not normal right there. That's not normal right there. That's what Outlier looks like. Again, 82 cents a day. Where can I get the slides in the Discord? I got you. Okay, so in the Discord over here, there's a section called FAQ and member contributions. Go to there, and then you're going to see Outlier trading plan. And oh, that's Joe. Here's a step-by-step walkthrough. Oh, look at that. I didn't know this was there. Here's a step-by-step walkthrough for you to check out. Look at Joe. Cool. Where is the trading plan? Did it? They must have moved it. Hang on. Our user guide. Portfolio manager. Bookmarklets. Oh, here it is. Outlier trading plans, MA, ETF, and sit in cash. So it's this Google slide right here. I update this Google slide every time there's an update. So it will always be updated. And it is updated as of right now. So like I say, FAQ and member section, scroll down to a smidge, Outlier trading plans, MA, ETF. And if you want a video of it, looks like Joe has already put a video out there for you. That was cool. I didn't know that was happening. Let's do one more question and let's get out of here. Okay, Will, good to see you, my friend. If I'm trading a small account, would it be better strategy to trade on the hourly 10, 20, 50 crossovers? I know trade my plan. I know trade my plan, Chris. You don't have to tell me that. But I don't have enough experience to know better. So Will, I would only trade hourly if you can devote the time to that, right? If you're trading hourly candles, that's a lot more time dedicated to it. In this case, I would tell you what I told who was that earlier? Mr. Lucky Pants. I can't remember at the top of my head. But I would just trade smaller stocks. And in Outlier, you can actually filter down for smaller stocks, right? You can set your price range. Instead of a minimum of $10, you could say maximum of $10. And then I would work on that. That honestly will do you a lot better than trying to day trade with hourly, because Outlier is not built on hourly signals. It's just not, but it is built on daily signals, and you can filter it down to be whatever size is best for you. And if you're working on small accounts, you could go options, or you could just go in stock, right? Whatever works better for you. Zachary has a great question about Outlier University. Hang on. Outlier University.
Are you ready? Let's go!
Respect is earned. Respect is never given.
Outlier University is so cool. So earlier this year, we went through Outlier University, and 9 gentlemen basically had their lives changed. And Joe is one of them. Deep Thought is one of them. And we have 7 other gentlemen who absolutely figured out the way to create generational wealth through the stock market. What Outlier University is, it's basically me teaching you everything that I know about trading. Everything that I know about trading. Now, there are some people who will charge tens of thousands of dollars to teach you exactly what I'm going to teach you for free here on YouTube. Now, you can actually go watch the entire alpha class on YouTube. Go to playlists and you'll see Outlier University. The entire alpha class is right there. Bravo class starts next week, and I'm very excited about it. It will be Tuesdays and Thursdays at 2 p.m. Central Time during our normal trading room time. And we have a new group of 9 students, and 2 of them are girls. This is going to be so crazy. 2 of them are girls. If you are one of the Bravo group, do me a favor and you're watching live, type Bravo in the chat. I know several of them are here, like Senior Wahoo. Art is going to be there. We got some alphas here in the chat as well, and some Bravos, right? So the Bravo class was actually handpicked by our alpha class. I know a lot of people are asking, wait, where did I sign up? Did I miss anything? You didn't miss anything. Our alpha group actually said, we feel like these 9 people embody, you know, what it takes to be an outlier. And we extended an invitation to them, and we're going to be starting with them next week. Like Rick Warfish, who makes all of our great songs, and Carol, she's one of the girls. And Skinny Buff Guy, he's going to be there too, and Shane's going to be there. Yeah, it's going to be great. It's going to be great. Hang on. Da Hammer just finished the Alpha University class yesterday. Yeah, there's Paul Dennis on the Deep. Go OU Brava class. He was in the Alpha class. So the reason that we do this, the reason that we price Outlier at the obnoxiously low price of 82 cents a day is we want you to be successful, right? You will see all over the internet, basically every other video, somebody trying to sell you a course, sell you their plan, sell you this or that or the other for tens of thousands of dollars. What we want to do is make you successful. And for 82 cents a day, you get full access to the platform. You get full access to the university. You get full access to the Discord. You get full access to every single trade that I take. You get full access to see how we're going to dominate the US Investing Championship in 2026. There are no upsells. 82 cents a day, $2.99 for the year, plus tax, will get you everything all in, full stop. And we're changing lives. We are changing lives. And I'm so proud to be a part of this. And that is why we give away as much as we possibly can here on YouTube. Because even if you don't want to spend all 82 cents a day, we still want you to be successful. That is why I go live twice a day here on YouTube. Plus, like, this is my favorite game in the world. This is like asking LeBron James to talk about basketball. Okay. This is like asking Steve Jobs, he's dead. This is like asking Tim Apple to talk about computers, right? I was watching a Joe Rogan podcast not too long ago. If you watch Joe Rogan podcast, put Joe in the chat. And he had the CEO of it's not Palantir, the CEO of Anduril. which is a government contract, a defense contractor. And I used to work at a defense contractor, Raytheon, and my project was the Predator and Reaper drones, the missile targeting systems, the little ball hanging underneath the Predator and Reaper drones. And the CEO of Anduril, they were talking back and forth for a while or whatever. And then hang on, let me pull this up because this was great. This is when he went in full nerd out moment, and I was like, oh, I get it. Oh, I get it. I get it because hey, look, there's me. Look, me and Sydney Sweeney. Wow, what a power couple, right? JRE. And let's go to the one I'm talking about because you can see when his eyes light up, like, oh my gosh, let me tell you all about it. This is like Elon talking about Tesla, right? Hang on. YouTube is so freaking slow on my PC. I don't know why. Palmer Lucky. He looks like he's straight out the trailer park, if I'm very honest with you. But you know what? Bro's got billions and billions of dollars, so it doesn't matter what you look like when you got that kind of money. Look, I clicked this already, and it's taking ages to load. And still going. Yeah, Tyson. Tyson knows. Palmer Lucky. Freaking come on. You're not helping me in my demonstration here. And it's only YouTube that acts like this. Oh, page is unresponsive. Great. Good thing I'm live right now. Frickin'. Hang on. I want to get to the end. And you'll see in just a moment. Hopefully you'll see in a moment. I don't know if you actually will see. Frickin' YouTube. Nothing on my computer acts like this except YouTube. Stephen F. In the meantime, Outlier program is only a small part of the Outlier package. The program, the training, the community. Exactly. This is what we're trying to do, is make you successful. And we're also trying to give you great content. I know I'm doing my best over here. I'm doing my best over here. It's still nothing. It's still useless ass YouTube. Let's refresh the page and watch it take even longer. Palmer is a wild guy. Super fun to listen to. Yeah, and there's a point, Nathan, later on. Good gravy. You cannot be serious. Why is it taking so long? Nothing on my computer acts like this, except YouTube. There's a point nearly at the end where he pulls out a helmet and he hands it to Joe, and you can see the switch flip, right? From like conversation to this is my thing. And his eyes light up and he's so excited. He's so enthusiastic. And I was like, oh. Now it's certainly. Hold on.
A little annoying.
Here we go.
Like, what a...
There's a spot near the end where everything shifts, and you can see in his eyes how excited he is. And so when I was watching this, I was like, oh, okay, I get it now. I see what people are talking about when they talk about how enthusiastic I get about stock trading. I could see it here. Let's play just a minute or two and see if we can find it.
None of what I'm saying sounds that crazy, right? It just sounds like any science fiction film. These are ideas that have been around for 100 years, but only very recently has it become possible. So this is a new product that we just announced at the Army's conference.
This is like me showing off Outlier.
Yesterday. We've been working on it for years, using our own money. No taxpayer dollars were used to create it. It's called Eagle Eye. And it is an integrated ballistics shell. So you've got a helmet, you've got hearing protection, you've got thermal sensors, night sensors, signals intelligence sensors that allow you to detect where cell phones are, where radios are, see that in your view. It even detects where gunshots are, shows them exactly where they're placed and how far they are.
So this is a recreation of it. So this is like,
yeah, this is a video feed of what it is.
So anyway, you can see just how excited he is.
Show them that feature. You need to be ready for how you show the feature. I need to be intimately familiar with every part of it.
Right. And so when I was watching this, I was like, okay, I get it. I get it. That's why people can sense whenever we talk how passionate we are about helping you find success, because that is our goal here at Outlier. We want to make you successful. It's like Chris when he's talking about options. Yeah, exactly. Is there a Discord link I could get? I just got Outlier. Oh, okay, cool. So go into Outlier, professional YouTuber / fund manager, not sharing his screen. Over on the far right-hand side is the Discord link. Go right there. There's a verification process you have to go through when you get there. Basically, you're just going to type in verify and then your email address. Use the email address you just signed up with at Outlier in order to make sure that you're a real customer. And then you're in, and it's going to be great. I'm so glad it's Fun Shirt Friday. It is Fun Shirt Friday. This is a Disney World shirt I got. So this is the little Pixar ball. I was excited to get this. Nothing too wild for Fun Shirt Friday today. All right, I am out of here. But in the meantime, if you're ready to save time, make money, start winning with less risk, click one of these 2 videos. Have a fantastic Friday. I will see you this afternoon, and stick around because we got more coming.